Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Boothra. Good afternoon. Did I say good morning?
You did. You're wide awake, my friend.
All right. Let's get the show started then. These are the top stories that we're tracking at 1:30 p.m. The Nifty and the Sensex edge up in a volatile session. FMCG, auto and IT show strength while metals slip. Midcaps relatively underperform.
Delta Corp slumps as the stock is under F&O ban and a stellar Q2 triggers profit booking.
Girish Tanti, Vice Chairman of Suzlon Energy, tells CNBC-TV18 that after deliberations, the promoters have committed to running the business and they won't be selling out.
Markson's Pharma fires up as it gets set to acquire Teva's manufacturing unit in India. The management is confident the acquisition will favor its growth strategy as it plans to double its capacity in India.
Relief for OMCs, as sources tell CNBC-TV18 the government will compensate them for losses on LPG marketing. The one-time compensation could be slightly over 20,000 crores.
Okay, all right, those are the top headlines that we are tracking at this particular time. For the markets, it's been very choppy. We did see some recovery at around 11 a.m. and some of it has been sold into. However, we are still managing to be in the green, a 54-point uptick on the Nifty, and we have the Bank Nifty, which is doing well as well, a 0.3% gain out there. The mid-cap side of things, though, are looking a little weak, so that index is in the red, though there is some recovery from the lows as well. And the FMCG pack is really doing well today, so that one is up 1.1%. So Reema, some buying and some selling. So it's quite choppy today. There's no single direction, so to say, for our markets today.
It's gone nowhere, right? At the end of all this choppiness, but mid-caps have been underperforming. So week to date, the Nifty is down 1.5%, while the mid-cap index, the Nifty mid-cap index's losses is edging towards 3%. So there is that underperformance for the third day in a row. And lots of mid-caps are moving around. So straight away, let's get to mid-cap movers. Vivek is joining us on the big wall. Vivek?
Well, that's right. So amidst all this volatility, few stocks that we are tracking at this point of time with interesting price action. First on our list is JBM Auto. No discernible block deals or bulk deals there, but volumes today are extremely high, almost 10 times, the last 5-day average. And despite the fact that, we couldn't see any block or bulk deals, still 2 hours of trading to go and we have significant volume action over here. The other stock, KDDL, on this particular stock, very interestingly, seeing quite a bit of buying action on the back of, another listed pair coming in. So this watchmaker is up almost 18% this particular month. GE&T, the other stock that we are tracking, up 6% this particular month. We also saw some rub-off effect as far as Kalpataru Power was concerned. Castrol India continues its gain for the third straight session, and this particular stock finally seen some volume action as well today. Some of the other stocks, Gokuldas Exports, another good mover, Triveni Turbines and Liberty Shoes, all of these stocks are edging towards their respective highs. On the other hand, if you're talking about the losing stocks, Panisha Biotech, this particular stock yesterday was nearing the upper circuit after the significant contract win, but today seeing quite a bit of a sell-off. Aster DM Healthcare, some of the stocks in this particular space have seen quite a bit of a sell-off. This particular stock is down almost 6.5% this particular month, and Praj Industries continues its loss for the second straight session.
Okay, all right, all the movers in one place. Vivek, thank you so much for joining us with those names, and we'll discuss in greater detail about Liberty Shoes as well. Has been a stellar mover in the last couple of months. With that, we move on and welcome Samit Chavan of Angel One for a technical check on the market. Samit, good afternoon. Thanks a lot for joining us. Choppy trade today, very flat moves as far as Nifty is concerned. Yes, there is a 50-point bump up, but the markets are consolidating at those levels. What are the charts suggesting?
Good afternoon. See, we are clearly, mirroring the global sluggishness. But overall, if you see, our market has, inherent strength. And, we are placed around important juncture now. As far as, Nifty is concerned, 17,000, 16,800, we are seeing as a sacrosanct support. And the way, we are positioned on the hourly chart, will not be surprised to see some recovery happening, in the second half and probably tomorrow as well. So 17,200, 250, these are the levels to watch out for. And once we surpass these levels, then probably we could trigger a good positive momentum in the upward direction. And then probably in a couple of days' time, we can see Nifty even surpassing 17,400. So we are a bit, a bit and hopeful that this important level of 17,000, 16,800, this support zone will hold. And from here on, we would see some recovery. See, as far as the banking index is concerned, it is, very interestingly poised. We are quite positive on Bank Nifty, and in last 2 to 3 days it has been consolidating, while Nifty has seen some, 1.5% correction in this span. So we expect Bank Nifty to, step up a bit, and from here on, once it surpasses 39,200, we could see Bank Nifty, leading from the front. So as of now, yes, one should stay positive and keep focusing on an individual stock.
And what would those individual stocks be?
Yeah, I think we'll go with McDowell United Spirits. This has been one of our preferred bet, since last a month or so. Although in last couple of days, stock has corrected a bit, but the kind of recovery we have witnessed in last 40-45 minutes from the important level of 800, it looks quite spectacular, and 825 reclaiming 825 itself suggests some sort of strength in this counter. So we expect McDowell to do well. Will not be surprised to see this stock again, moving towards its last week's size of 875, 880. So 880 is our immediate target, and one can buy at current level, keeping a stop loss somewhere around 808. Apart from this, we like Delta Corp, although stock has come off a bit in last couple of days, but overall, if you see, stock has already managed to form strong base around 190, 200, and from here on, considering the weekly chart structure, we expect the stock to surpass 230, 35 quite soon. So at current juncture, we would like to initiate buying Delta Corp, keeping a stop loss somewhere around 208, and the immediate target would be around 234.
All right, so those are your technical picks. Thanks a lot for joining us and taking us through them. With that, we'll slip into a short break now. On the other side, we'll put focus on Liberty Shoes as the stock sees gains. Stay tuned.
That's right. Thank you for that. Liberty Shoes is indeed one of the big unusual movers in today's trading session. Why just today? In fact, it's up today. This month, it's up over 25%. And this year itself, since September, it's more than doubled. Around 125% is the up move that we've seen on that stock. But long-term watchers of Liberty Shoes will tell you that, this stock has been prone to such big rallies without explanations. Because if you just take a look at it, between June to October 2005, in just a few months, the stock rallied 4 times. Then we had in Feb to September 2014, the stock rallied almost 3 times in that little period of time. August to September itself, in just about a month and a half. In 2017, we saw the stock rally almost 1.5 odd times, and thereafter, over a prolonged period, we do see this rally fizzle out post levels upwards of 350. But as we speak, the stock is at a record high, sitting behind a big rally of almost 3 times since the start of June itself. What happens from here on will be extremely crucial to watch out for. On September 24th itself, the company announced a launch of their new product range. They announced 2 brand ambassadors as well, Ayushmann Khurrana as well as Rakulpreet Singh, and said that they are confident of achieving the highest ever top line and the bottom line of the company, which will surpass pre-COVID levels as well. And they will also turn debt-free in the next couple of months. But debt anyway, long-term was negligible, short-term was around 120 odd crores on their books itself. Where does it stand in the pecking order of revenue as well as the other financial parameters when you compare to peers? Relaxo Footwear is the leader of the pack in terms of FY22 revenues, over 2,600 odd crores. Out there, Liberty is actually at the lowest of that ladder, just around that 500 crore mark as of last year. Also, the margins have been much lower than peers, just about 10% for FY22. And over the last 10 years as well, the margins have been hovering between 8 to 11 odd percent. And as a result of which, their net profit is actually 1/50th of its next peer, Bata, which is around 103 odd crores, and almost 1% of Relaxo's FY22 profits. It's a pitiful ROE and ROCE for the company as well over the last 3 years as far as those averages are concerned. But the important part is, can they improve from here, and how much of that is in the price? The footwear space is increasingly getting expensive, with Relaxo and Campus trading at 75 to 80 times 2-year forward earnings. Bata as well is trading at around 43 times. But assuming that Liberty Footwear actually grows their net profit 50% over and above their pre-COVID peak of 11 odd crores, they would still be trading at around 45 times, a little over Bata. The question is whether they do go ahead and turn that corner around, or will it again be the same as it has been 4 times in the last 15 years at least.
Okay, very interesting data there, Mangalam. Thank you so much for making sense of what's happening, or maybe we don't know what's happening yet with Liberty Shoes, but that stock definitely is in focus. But the other stock, which is buzzing around in trade in the broader markets, is Markson's Pharma. The company is set to acquire Teva's Indian manufacturing facility in Goa. Ekta is joining us to tell us more. Ekta?
Thanks for that. Well, yes, it's definitely a big development when it comes to Markson's Pharma, because it is an Indian pharma company which is acquiring an MNC's unit which is based in India. They will be acquiring their bulk drug formulation unit in Goa. And while the amount is not disclosed, it is going to be an important development for Markson's because it is a 100% export unit, or rather they will be using it primarily for exports. This particular facility has already received approvals from the likes of the Japan regulators, Canada as well as European, and hence it is expected to help in terms of propelling Markson's entire export space. Yes, the consideration is not known, but Markson is expected to invest around 200 to 300 crores eventually in the long term to build up capacities. When it comes to this plant, they will also be inheriting employees from this particular plant to the tune of around 130 to 150 employees. They will also have certain contract obligations which they will fulfill till the end of FY23, and they could probably extend it as per mutual agreement going forward as well. So yes, important development, and generally these kind of facilities come with strong compliance, and hence that will help in terms of propelling companies such as Markson's, their export business.
Okay, thank you very much, Ekta, for that. Get into a break. As we do that, here is some important news for all our investors. You can track the US market action real time on Money Control. So log on to the Money Control website or app. Stay informed about all that matters in the global market. Welcome back. You're tuned in to Midcap Radar on CNBC TV-18. Another stock on our radar is NMDC. They've moved towards listing of their steel business. Sonal, what are the implications?
Well, it is an important event that we'll be watching out for. So finally, the company has received an approval from Ministry of Corporate Affairs in order to demerge their steel plant. Now, remember, that is something that the street was waiting for a long time now, and they could list the steel plant entity in next 2 months. Now, the next question is, how do you value this particular business? So they have a capital expenditure of 19,000 crore rupees in just this steel plant. So if the valuation is done as per capital work in progress, then we could just figure out the different levels at which this particular business could list. At 40%, it could be 26 rupees per share. At 50%, it could be 32 rupees per share. At 75%, it could be 49 rupees per share. Those are the listing levels that we are watching out for. All depends on the capital work in progress. So within 2 months, the listing is expected. And that is something that the investors will be watching out for as well. Well, that's about NMDC, but Suzlon Energy, that is the next stock on our radar. The company saw a change of guard after the demise of former MD and CEO Tulsi Tanti. Vivek is here to tell us all about the management transition and also the highlights from the conversation we had with the management earlier today. Vivek?
Well, that's right. After the unfortunate demise of Shri Tulsi Tanti, quite a few questions in terms of, how exactly, number one, how exactly will the management transition happen? What would be the fate of the rights issue that the company recently announced? Also, there were worries about, what some of the larger investors, remember, Dilip Sanghvi holds a significant stake in the company. So quite a few questions. And also, there were some worries or, there were some expectations that the company, whether or not would continue as an entity, under the same management. So for all of these, we actually got in touch with the management. As of right now, they clarified that, number one, the management control continues to remain with the Tanti family. So 2 of his brothers have taken over the important responsibilities. In terms of the rights issue is already underway. The company is looking to raise almost 1,200 crores via the rights issue. And the management indicated that 900 crore out of this intended 1,200 crore rights issue would mainly go towards, repayment of debt. Remember, another worry for the company is the high debt burden that it carries. So the company had an EBITDA of close to 850 crore in FY 2022. So they have indicated that they are targeting a debt-to-equity ratio of close to 2:1. The other worry, of course, was the low shareholding as far as the promoter and promoter group is concerned, just around 14.5% stake. And, the Sanghvi family holds around 12% stake. So this was another question that we asked them. Categorically, they've said at least for the time being, no talks are underway in terms of an actual stake sale or selling out of Suzlon.
Thank you very much, Vivek, for encapsulating the conversation that we had with the management. But let's also get in the sound bites from Suzlon Energy's Executive Vice Chairman Girish Tanti and the CFO Himanshu Modi. We chatted with them earlier today.
There is a very strong foundation that our Tulsi Bhai had set for the organization. And I think we are on a very strong chart now for, growing from here. And the we've had internal management discussions with the leadership team, and all of us have jointly committed ourselves to driving the vision and the plans which have been charted out. And we all stay committed, both from family as well as from the management. The Sanghvi family has been a critical, important partner for us in our journey. And we have had discussions with them as part of the transition plan. And, there wouldn't be any change as regards to the understanding of the relationships we have. So there's not going to be, their participation shall continue as before.
Consolidated debt as of 30th June 2022, quarter ended Q1 FY23, was about 3,200 crores. The rights issue proceeds, as you know, is about 1,200 crores, out of which 900 crores would go towards debt repayment, and the balance, about 300 crores, is for general corporate purposes and meeting out issue expenses. That's, of course, assuming the issue size is fully subscribed. So in tranche one, which is, out of it, since it's a partly paid share, out of the 1,200 crores, we are calling for 50% of the paid up amount. So roughly about 2.5 rupees per share, which would translate into 600 crores in tranche one, of which 16.5 crores is the estimated issue expenses. So 583.5 crores in tranche one would go towards debt repayment. And from the subsequent tranches, another 316 crores would go into debt repayment as and when the subsequent calls are called for. From the rights issue proceeds, as we pare down the debt, assuming a 900 crore reduction, we would have a total 90 crore interest cost saving further beyond what we would see in the Q2 results as and when they come out.
Okay, all right. Those are some comments coming in from Suzlon's management. But just a quick look at the markets. It has recovered quite a bit from the lows. The Midcap index, it is in the green, and the Nifty, it is up 92 points as we speak. So some buying coming in from the lows as well. Not at the day's high though. And the Midcap index is up 40 points in the green. The Bank Nifty has picked up as well. So that is where the gains in the Nifty are coming in from. Bank Nifty up 0.5%. And in the broader markets, there are a couple of stocks which are in focus. Just pull out IDFC and IDFC First Bank. These two stocks have been surging, and how IDFC in fact is up around 15% this month itself, and IDFC First Bank is the other one which is seeing gains of around 10% this month. So some buying across these two group names together. We also have Coal India and Axis Bank which are in focus. These two also have been seeing some good gains. So Axis Bank is the one which is up 10%. It's a heavyweight and seen a 10% move this month itself. On the downside though, we have Ashok Leyland and Ambuja Cements. So some selling out there. Ashok Leyland down anywhere between 8 to 9% this week itself, and so is Ambuja Cements, which is not doing so well, down around 5% this week. But for the markets, looking good, picking up pace. As we speak, Nifty is up 100 points, and the Bank Nifty, it is the one which is pushing the Nifty higher, and how that index is at the day's high. With that, we'll take your leave on this edition of Midcap Radar, your stocks when we return.